Hello, Prof. Chawapa.
Good evening, sir.
Okay. So let's wait for our students. They are special candidates.
Okay, sir.
They have not joined. Okay. I think someone has joined. Okay, good evening, class. My host, can you see my screen? And can you hear me?
Yes, I can hear you and I can see your screen, sir.
Thank you. So we have just one student in the class. I think we can start the class because it's already 12 minutes past 6. Okay, good evening once again. My name is Salih Ibrahim, and I'll be one of the facilitators of taxation on this platform. Without wasting our time, we are going to start the class right away. Mr. Biodun, you happen to be the only student in class, but that's not an issue. So I want to believe that you are getting your your writing material ready for any necessary jotting that you may need to do. Okay, so the topic is taxation. The topic is the subject is taxation. So as we all know that taxation is taking a new dimension in the country right now, in the sense that tax is being reviewed on a regular basis, at least annually. So we keep on having revised tax law year in, year out. So that informed the reason why taxation was moved from foundation to scale and made compulsory for all the students at the scale level. So the new syllabus is such that you are expected to know these changes in tax law and be able to apply them in solving taxation question. Okay. So part of these changes was the first one we had in 2020, termed Finance Act 2019. The Finance Act 2019 was assented to by the president in February 2020, and it became effective in that month. So all what I'm going to be doing is going to be Finance Act compliant. Okay, go to the Finance Act compliance. After the 2019 edition, we have the 2020 Finance Act, and the recent one we have this year, which is Finance Act 2021. So for today, we are going to start the class by looking at, we're going to look at stamp duty and value added tax. As you all know that this is purely question and answer session. So we'll be taking some examination related questions and then we provide solution to them. So we're going to start with the first question on my screen here, which is on stamp duty. Stamp duty. So the requirement of this question says that we should briefly discuss nature and objective of stamp duties. I think if not the last date, it will be May 2021. A question was set on stamp duty. I think I could remember either last date or the previous date. So before the Finance Act 2019, we have the stamp duty, but the stamp duty is an area that is a tax area where the government was not given a great deal of attention, okay? So because of that, the Stamp Duty Act, okay, that's the law, that's the relevant tax law that is governing the operation of stamp duty. We call it Stamp Duty Act. So the Stamp Duty Act was amended in the Finance Act 2019 so that government can tap the maximum benefit arriving from what we call due-table instrument, okay? So we're going to see what we mean by due-table instrument, okay? Now, according to this question, the question says we should briefly discuss the nature and objectives of the stamp duties. The nature and the objective of stamp duties. What are the nature of stamp duty? Before you talk about nature of stamp duty, first, what do we mean by stamp duty itself? When we say stamp duty is a form of tax form of tax that is levied on instruments that are considered due-table. Okay, just like your other levy, just like your other taxes that you pay on transactions. Stamp duty is payable on due-table instruments. So when we say due-table instrument could be agreement, okay? It could be a document. Do you understand that? It could be a kind of agreement between two people, between companies, between individual and another individual, between individual companies. So any form of document is what you pay stamp duty upon. So that is where your stamp duty comes in. So we can define stamp duty as a levy that is payable on due-table instruments. Levy that is payable on due-table instrument is what we call stamp duty. Okay. Now, the stamp duty, you can see this definition here. There are duties, a form of levy on instrument, e.g., bill of exchange is a document. Contract agreement is a document. So when you enter into an agreement with a third party, you enter into an agreement with a third party. For that agreement to be presentable or to be admissible in the court of law, it must be properly stamped, meaning that you should pay stamp duty on it. So when you pay stamp duty on it, it will be stamped. When it is stamped, the document becomes authentic and you can use it in court cases. So as we go on, we're going to see other due-table instruments, other instruments that you are required to stamp, and instruments that are not subject to stamp duty. So the stamp duty is governed by the Stamp Duty Act, CAB S8 11/2004, as amended by the Finance Act 2019. Please, I'm supposed to include that one here. So don't just stop here. The stamp duty is what? Is governed by the Stamp Duty Act, CAB S8 2004, as amended by the Finance Act 2019. So we've seen the meaning of stamp duty. We've seen the enabling act, okay? The enabling act with respect to stamp duty. So what are the instruments that you are expected to stamp? What are the instruments that you are expected to stamp? Number one, an instrument executed in Nigeria. You are in Nigeria and you enter into an agreement in Nigeria with another person. That instrument, that agreement is executed in Nigeria. Therefore, you are expected to pay stamp duty on it. Okay? Or even where the agreement is not even executed in Nigeria, but it relates to a property situated, okay, or any matter done or to be done in Nigeria. Let's see that. Number one, what did I say? Instrument that is required to be stamped. One, the instrument is executed in Nigeria. Automatically, stamp duty is payable on that instrument. What about where an instrument is not executed in Nigeria? How will you know whether you are supposed to pay stamp duty on that instrument or not? You will know whether to pay stamp duty or not, whether the document, okay, whether the document that is being executed outside Nigeria is with respect to a property or any matter in Nigeria. So if that is the case, that document is expected to be stamped. Okay, it is expected to be stamped. So if it is not stamped, what is it? Cannot be given as an evidence in the court for any purpose except in criminal cases. Okay. So when you have instrument that is not stamped, you can what? You can't use it in court of law except if it is in the case of criminal activities. This is what we mean by stamp duty and the nature of stamp duty. So the main objective of stamp duty, the main objective, I didn't include objectives here. The main objectives of stamp duty, number one, is to ensure that any instrument that is being used as an evidence in the court of law is an authentic document. Okay, we want to be sure that any document we are presenting in the court of law as an evidence in any kind of case is an authentic document. Number two, stamp duty serve as a revenue generating source for the government. So all the money you are paying on stamp duty is being remitted to the government. So is another means of generating income to the government. These are the objectives of stamp duty. So we have, in brief, looked at the nature and the objectives of stamp duty. Any question regarding this? Question? Mr. Abiodun, Mr. Accolade, or Mrs. Dono. Ask your question. Ask your question. Waiting. Do we have question or should proceed? Okay. Let us proceed. Let us proceed. Question number 2. List 5 instruments chargeable under the Stamp Duty Act. List 5 instruments chargeable under the Stamp Duties Act. When we say chargeable instruments, we can also call them dutiable instruments, instruments that are subject to stamp duty. Number 1, this list is not exhaustive, okay? We have so many instruments that are chargeable. These are some of them, okay? These are some of them as listed in the Stamp Duty Act, Cap S8 2004, as amended by the Finance Act 2019. Number 1 is leases. You know what a lease is? When you lease an equipment, property from the lessor. That is, you want to use that property, okay, for a kind of fee, okay, in return to the lessor. That is a lease. It means you are entering into an agreement. That lease agreement is expected to be stamped. Number 2, contract agreements. Contract agreements. The contract agreement is when you win a contract and you are required to sign a document to show that that contract has actually been awarded to you. So, to make that contract agreement authentic, it is required to be stamped. Bills of lading. What is bill of lading? The bill of lading is a document sent by the exporter to the port of destination sent by the exporter to the importer that the importer will use to claim the goods at the port of destination. So if I buy something from a supplier overseas and the supplier sends the goods to me down in Nigeria, for me to be able to claim it, the exporter over there will need to send me bill of lading. Is this bill of lading that I will use to claim the goods at the port? So this bill of lading is a chargeable instrument under the Stamp Duty Act. Marketable securities. What are marketable securities? That is traded securities, shares, debentures, loan stock, loan notes are marketable securities. Okay, short-term loan, treasury bill, government bonds, okay, they are marketable securities because you can sell them. So they are chargeable instruments. They are required to be stamped. Then we have policies documents. Policies documents. These are policy. Okay, agree policy is required to be stamped. Share warrants is expected to be stamped. Incorporation documents, CAC documents, is expected to be stamped. These are some of the items that are chargeable under the Stamp Duty Act. Now, I have extracted this question in line with the syllabus, in line with the topic. This question and answer session is covering the content of stamp duty as a topic. So it just for them to take you stamp duty, this is what I'll be teaching you. Definition, objective, instrument, chargeable, exempted instrument, what we mean by commissioner for stamp duty, adjudication procedures. Okay, so this is just in a question form. Do you understand? So invariably, I'm teaching you this topic, stamp duty, the way it is. So that is question number 2. If you have question, please don't hesitate to use the chat button to ask your question, and I will respond accordingly. Number 3, mention 3 items exempted from stamp duties. Mention 3 items exempted from stamp duties. Now, some of the items that are exempted from stamp duty are, number 1, document that is emanating between Nigerian government and other governments of another country. Okay, government agreements. So if the Nigerian government is making an agreement or is entering into an agreement with the Ghanaian government or any foreign body, that document is not expected to be stamped. Okay, it's not expected to be stamped. It is an exempted document. Number 2, instrument relating to reconstruction and amalgamation. What is reconstruction? Reconstruction is when you are trying to reorganize your company. You are trying to restructure your company. When you have a company that is dying and you want to revive the company, the process of reviving the company may be through a kind of restructuring, okay, or capital reconstruction or amalgamation. You are merging the company with another company. So during this process of amalgamation or process of capital reconstruction, document will be emanating. Any document coming from this process is not accepted, it's not what? Expected to be stamped. It's not expected to be stamped. Then transaction and sales of property under liquidation arising from a compulsory winding up by court order. When you have a company that is facing insolvency issue, the company is not solvent. You know what insolvency is? Lack of funds to settle debt obligation. Okay? Liquidity is a sign of insolvency. Liquidity problem is a sign of insolvency problem. However, insolvency is a problem that is coming as a sort of long-term period of liquidity issue. When a company keeps having liquidity issue over a prolonged period of time, that problem may lead to insolvency. And when the company is facing insolvency, then the debt holders may institute an action against the company for a possible wound up. So if the court so decide that the company be wound up, the properties of the company will have to be sold. So when we are selling the property, any sales realized from that act are exempted from stamp duties. I don't know whether we are together on this platform. If we are together on this platform, let me see your hands, or let me see your comment in the chat box. Let me see your comment in the chat box. If you are with me, say yes. If you are with me, say yes. None of you is with me. I can see your yes. Okay, Abiodun, I see your hands. What about others? Are you with me? Are you with me? Please. All these questions are, they look simple, but these are standard examination questions. Okay. All right, I have only one person that is with me here. Okay, thank you. Thank you. So let's continue. So question number 4. Question number 4. Briefly discuss the relevant tax authority with respect to stamp duties. When we say relevant tax authority, what do we mean? Relevant tax authority is the tax authority that is responsible for the collection of taxes. Okay? Tax authorities that are responsible for the collection of stamp duties. Who is a tax authority, or what is a tax authority that is supposed to be collecting stamp duty? Now, stamp duty can be payable to Federal Inland Revenue Service, and it can also be payable to the State Internal Revenue Service. So if I'm in Lagos, my stamp duty may be payable, for instance, to FIRS or to LIRS. It depends on who is carrying out the agreements, who is executing the agreement. Now, when you have an agreement, a document that is emanating from individual to individual, at least within two individuals, that document is expected to be stamped, and the stamp duty is payable to the state tax authority of the location where that instrument is being executed. 1 minute, please. Okay. So that is a situation where your stamp duty is payable to State Internal Revenue Service, where the document is coming between two or more individuals. But when you have a document that is being executed between individuals and limited liability company, that document, the stamp duty of that document is not payable to State Internal Revenue Service. It's payable to Federal Internal Revenue Service, because one of the parties to the execution of the contract of the instrument is a corporate entity. So that stamp duty is payable to Federal Inland Revenue Service. It's payable to Federal Inland Revenue Service. So that's about that. You can see the relevant tax authority, going by what I have here, the relevant tax authority for the collection of stamp duty are FRS and SIRS, State Internal Revenue Service, that's SIRS. While FRS collects stamp duties on instruments executed between two or more companies or an individual, SIRS collects stamp duties on instruments executed by two or more individuals. Can you see that? So, instrument emanating between two or more companies is FRS. Instrument emanating between one company or two companies or more companies and individuals is still payable to FRS. The only one that goes to SIRS is the one with between what? Between two or more individuals. Okay, I think this was supposed to be a question. I didn't look at it. This is about types and forms of stamp duties. What are the types of stamp duties we have? Basically, we have two types of stamp duties. Okay, we have the fixed duties. Fixed duties, we have the ad valorem duty. These are the two, fixed and ad valorem duties. When we say fixed duties are stamp duties that the amount is fixed on the instrument, meaning that the amount you are paying does not vary with the face value of the instrument that is being stamped. For instance, a payment receipt will be subject to fixed duty. So if I have two payment receipts, one is having 10 million naira and the other one is having 5 million naira, the two of them will be subject to the same amount of duty. So the amount of duty you are paying does not vary with the value on the receipt. That is fixed duty. So example is payment receipt, bank note, check leaves, stamp duty on check, whether it is 100 booklets, checkbook, 50 booklet checkbook, you are paying the same amount of stamp duty on it. Then ad valorem. Ad valorem stamp duty is that duty that varies with the face value of the instrument that is being stamped. Okay, they vary with the face value of the instrument that is being stamped. An example is bill of exchange. The stamp duty you are going to pay on bill of exchange will be based on the face value of the bill of exchange. So if on my own bill of exchange, I have 5 million naira, the stamp duty I am going to pay will be different from yours with a face value of 10 million naira. Then we have property valuation. The amount of duty you are paying depends on the valuation carried out. Okay, the result of the valuation. So if I carry out a valuation of my property and I use a professional valuer, after giving my valuation statement, it is expected to be stamped. And the amount of stamp duty I'm going to pay on that instrument will depend on the value of the property. Okay. Now, for ad valorem stamp duty, the rate will be determined by the commissioner of stamp duty. We have a commissioner of stamp duty, just like we have the chairman of the Federal Inland Revenue Service. Okay? The commissioner of the stamp duty is the administrative head of the stamp duty division. So the commissioner of stamp duty, one of his responsibilities is determination of the amount of stamp duty to be paid on instruments that are considered to be ad valorem. Okay. So these are the two types of stamp duties. Question 5. What are the 5 or identify 3 methods? Identify 3 methods. Sorry. Identify 3 methods of stamping. When we say stamping, we have various ways by which an instrument can be stamped. What are these ways? Number 1, affixing adhesive. Affixing adhesive. Adhesive simply means gum. Adhesive means gum. I think I can still remember that from my introductory technology. Okay, adhesive means gum. So when I say affixing adhesive, it's like, I don't know if any one of you is familiar with ICANN stamp before now. The ICANN stamp before now is such that it's just like a paper, a rectangular paper with ICANN, name ICANN and ICANN logo on it with the, what do you call it? The number of the stamp on it. So if you want to use it on your audit opinion page, you have to pick that paper, put gum on the surface, then put it on the opinion page of the of your report, of your audit report. So that's what we call affixing adhesive. You are using gum to bind the paper to the document. That's one way of affixing, of stamping an instrument. Number 2, affixing postage stamp in lieu of adhesive stamp. So postage stamp means the normal stamp you know. Instead of the normal stamp like ICANN stamp, we can have like your normal stamp like this. You just look back and the thing will appear on it. So in lieu of affixing adhesive, you can use a postage stamp instead. We are all familiar with postage stamp. We have at least one in our office. Abi, you have in your office, I have in my office. No one will tell me he has not seen, what do you call it? Stamp before. Okay, so we have embossing with dyes. Embossing with dyes, using dye to color it. Okay, it's another way of stamping an instrument. Printing of the instrument. Printing of the instrument. So it may be that the instrument has been stamped online. You just print it out. So maybe it can be right before you print it, maybe send it to the Commissioner of Stamp Duty and you just write stamped on it, stamped, and you print it out. These are the ways of stamping an instrument. These are the ways of stamping an instrument. Question number 7. Who is commissioner for stamp duties and what are his functions? Okay, what are his functions? Like I said earlier, the commissioner of stamp duty is the administrative head of the stamp duty division. So he oversees the day-to-day affairs of the stamp duty division. Okay, so he assesses documents for the purpose of determining the appropriate amount of duty to be paid. That's one of his functions. We want to stamp an instrument. The first thing you do is present it to the commissioner of stamp duty. If it is a fixed duty, no problem, because that one is predetermined. You know the rate, maybe it's 5%. That is fine. But if it is ad valorem duty, the rate is not fixed. You will need to present it to the commissioner of stamp duty. The commissioner of stamp duty will now be the one to decide on the appropriate amount of duty that you need to pay. He is the custodian, He is the custodian of dies and stamps. So all items that are used for stamping, stamp, dies, adhesive, are in the custody of the commissioner of stamp duty. Okay, they are in his custody. They are in his custody. So you also adjudicate. You may be asking your exam, what do you understand by adjudication? What do you understand by adjudication? Adjudication is the process by which the commissioner of stamp duty determines the amount of duty payable on ad valorem instruments. That is what we call adjudication. It is the process by which the commissioner of stamp duty determines the amount payable on ad valorem instruments. That is what we mean by adjudication. To be sure that we are together on this line, on this platform, can I have your view? Is there anything you want me to clear? Question, we have solved 6 questions now. So, any questions so far? Any questions so far? Take your questions before we proceed. I'll give you one more minute. Okay, no question. Let us continue. Let us continue. Let us continue. What do you understand by, I've explained this already. What do you understand by adjudication? I think that's what I did earlier. This is the process of determining the correct amount of duty by the commissioner of stamp duties. And what are the benefits of adjudication? 1, it is the first step in disputing the views of stamp duty of office of the correct amount of duty. Now, when you stamp an instrument, just like you have in the case of FRS, where you will serve an additional assessment that the amount of tax you have remitted is not the appropriate amount you need to remit. The same thing also happens in stamp duty. You may receive an assessment that the duty you pay was not the correct amount of duty. Come and pay additional duty. So you may need to object, okay, to that assessment because it's like an additional assessment. So before you can object to that assessment, the first thing that will be looked into is, as the Commissioner of Stamp Duty adjudicate on that instrument. Otherwise, your appeal or objection will not be considered. So it shows that the document is genuine. So when the Commissioner of Stamp Duty adjudicates on your document and the document is stamped, it confirms the fact that the document you have is an authentic document. It satisfies the statutory requirement and it makes the instrument admissible in the court of law. These are the benefits of adjudication. So the definition of adjudication and the benefit of adjudication. Okay. So that's the end of stamp duty. That is the end of stamp duty. It's as simple as that. It's as simple as that. So, general question on stamp duty before we move to value-added tax. So we are covering two topics today: stamp duty and value-added tax. We are done with stamp duty. We are moving straight to value-added tax. Okay, no question, Abi. Pelumi, are you on this platform? Is Pelumi here? No, Abi. You are not. Can you see my screen at all? Can you see my screen?
Yes, sir. We can see your screen, sir.
Okay. Okay. So let's move to value-added tax. Value-added tax. Question 8. Highlight the objective of value-added tax. By the way, what do we mean by value-added tax? Value-added tax is a form of indirect taxes. It's one form of indirect taxes that taxpayers pay. And by nature, value-added tax is a multi-stage tax. Multi-stage in the sense that the tax is paid at stage of the value chain. At every stage of the value chain, value-added tax is paid. Now, don't forget that we can group our taxes into two broad categories: direct and indirect, right? So when we say direct tax is the tax that the taxpayer pays, and the incidence of that tax is borne by the payer of the tax. Example, company income tax is a form of direct tax. okay, is a form of direct tax. Your pay as you earn is a form of direct tax. Who bear the burden of your pay? Is it not yours? It's deducted directly from your salary. It reduces your disposable income. So it's a direct tax. But for value added tax, the company pays the tax. Is the company or the supplier that pays the tax, but the person that suffers the incidence of the tax is the person who has consumed the product that the supplier is selling. For instance, if I am a bread manufacturer, I bake bread, I will have to go and buy flour. When I buy flour of 100,000 naira, the person that sells the flour to me will charge VAT. And this is how it works. Let me take my calculator. 1 minute. So, look at it. I bought this product, flour. I bought it for 100,000 naira. VAT exclusive, meaning that I've not included VAT. So, the supplier, the seller of that flour to me will say, come, I have the obligation to charge you VAT. The man will multiply the 100,000 by 0.075 to get what? 7,500. So the total amount I will pay to the seller is 107,500. That's that. That's what I will pay. Did I pay the tax to the government? No. Who did I pay to? I pay to the seller of the product, to me. Now, the seller of the product will now take this 7,500 and pay it to FRS. Who suffered the incidence of that tax? Was it the supplier or me, the buyer? Who suffered it? Your response. Who suffered it?
You.
Okay. So me that bought that product, I suffered the incidence of the what? Of the tax. But I wasn't the payer. I wasn't the one that paid it. The company remitted it, but indirectly, I paid the tax. That's why we say VAT is what? It's an indirect tax. Now, by the time I want to sell this product, my cost is 107,500. I use this to manufacture bread, to bake bread. I sell one bread for 500 naira. VAT inclusive. So, by the time I sell the bread to the consumer, to my customer, the customer has paid me alongside value added tax. What I will do is that for me to know the amount I'm going to pay to the government, I will look at when I bought the flour, how much tax did I pay? That is my input, because flour is my input. The amount of VAT I paid on flour is referred to as my input VAT. Then, when I sell my bread to my customer, the amount of VAT I charge to them is output VAT, because my output is bread. I will now say, okay, I collected 200,000 VAT from my customer, but I paid 150,000 VAT to my supplier. Then my net VAT payable is 200,000 minus 150,000, which is what? Which is 50,000 naira. That is how VAT works. I'm going to see computation. So, what are the objectives of VAT? What are the objectives of VAT? 1, to increase government revenue. To increase government revenue. The major source, okay, where government generates the most amount of tax is value-added tax, because that is generated on an ongoing daily basis, So it makes money available for government to run its recurrent expenditure. You will hear that every month there is meeting of Federal Executive Council, Abi, the FEC are holding meeting. Why are they holding meeting? They are holding meeting for them to share the revenue generated from value-added tax for that month among the federal, state, and local government. That is value-added tax. And that is one of the objectives. Number 2, to reduce the incidence of tax evasion. To reduce the incidence of tax evasion. If you leave me as a taxable person to go and remit my VAT by myself, I may not remit it. I may be reluctant to remit it because of the money that will go out of my pocket. But if I have paid the money alongside the cost of what I'm buying, I do no longer have the opportunity to evade the tax. And that is one of the objectives of value-added tax. Number 3, to increase exports. To increase exports. How? When you import products into the country, import duty is charged. However, when you are exporting, import duty is a kind of also a form of value-added tax, just on what? On import. But when you are exporting, there is no export duty. Why? Because government is encouraging export. So we need more of exportation than importation in order to manage our balance of payments. I believe you know what balance of payment is. Balance of payment is the difference between the monetary value of your exported goods and services and your imported goods and services. So, for a country that is good enough and is having enough exportation, it is expected that the company have a balance of payments surplus. meaning that value of export should be greater than the value of import. But if the reverse is the case, that is where you have a situation of balance of payment deficit. So the reason why Nigeria is having balance of payment deficit is the fact that most of our products are imported. So we import more than what we export. And that situation will lead to balance of payment deficit. So last one, to simplify tax collection procedures. The value-added tax procedure is very simple to operate. And it reduces the administrative cost of taxation. Who is collecting it? It's not government official. It's company that will collect it and remit. So administrative cost is reduced on the part of the revenue authority. It's just at the end of the month, they are waiting for company to come and remit. No any tax official is running after you. You come, you have collected the money from the customer, so it's not your money. Go and pay it to the government. So it reduces the administrative cost of what? Of taxation to the tax authority. These are the objectives of value-added tax. Question 9. Briefly discuss the administration of VAT. Now, normally, VAT is administered by the Federal Inland Revenue Service. However, recently, we have cases where the state government is challenging the federal government on who is supposed to collect value, especially Rivers and Lagos State. This court is still in court, okay? The case is still in court. That is state that is supposed to be responsible for VAT collection and not the federal government. While federal government is claiming that they are supposed to be collecting VAT. So until the court decide on who is to be collecting VAT, what is currently in operation is the fact that the relevant tax authority for the collection and administration of VAT is the Federal Inland Revenue Service. Okay? And the Federal Inland Revenue Service is given the power to do anything expedient for the assessment and collection of VAT. Okay? Because it is in their power, so they have the authority to do everything possible to ensure the collection of value-added tax from government. Now, what is the registration procedure? For every company that is registered with the Corporate Affairs Commission, whether you are a limited liability company or you register as a business name, you are expected to register for value-added tax purpose. It is mandatory that you register with Federal Inland Revenue Service for the purpose of value-added tax collection. Whether you are a limited liability company or otherwise, you have to register. Now, what is the registration deadline? Before the Finance Act 2019, you are expected to register for VAT within 6 months of commencement of business, or within 6 months of coming into effect of the Value Added Tax Act, VAT. What this means is that you have to look at the date of your commencement of business up to the present moment, and the date where the value added tax came into effect on the present moment. Which one is longer? So, sorry, which one is shorter? The one that is shorter is the one that within which you are going to what? Register for VAT. So, with the Finance Act 2019, that option is no longer there. You have to register for value added tax within 6 months of commencement of business. And by commencement of business, we mean the first day that you make your first sales. That day on which you make your first sales is your date of commencement, or the first day that you render your first service. If you are a service-oriented entity, that is your date of commencement. Or the first day that you win that contract. If you are contract-oriented business, that is your commencement date. So within that date, until 6 months, you are expected to register for value-added tax. Every ministry, that's B, every ministry, agencies, extra ministerial departments are also required to register for VAT, okay? And you use your address of operation for the purpose of registration. So this is the administration of the value added tax. Okay, that's the administration of the value added tax. Question number 10. Distinguish clearly between input and output VAT. Who can distinguish for us? What is input VAT? What is output VAT? I think I've mentioned it before. Oh yeah, type in your solution. What do you mean by input VAT? And what do you mean by output VAT? Waiting for a solution. Send me your answer. Distinguish clearly between input VAT and output VAT. Are we there? Let us make this class interactive. Let's make it interactive. Okay, let's continue. So I said input VAT is the VAT, the value added tax that you pay on your inputs. If you use raw material, where you buy your raw material, you pay VAT on the purchase. That payment is an input VAT because your raw material is your input, is what you use to what? To manufacture your product. While output VAT is the VAT you collect from your customer, those that buy from you. So that is basically the difference between input and output VAT. So see there, tax paid by a tax person for the supply of taxable goods or services purchased or supplied to him is known as input VAT. While the tax collected by tax person on the supply of taxable goods and services to his distributor, customer, agent, or client, as the case may be, is known as output VAT. Is known as output VAT. So the difference between the input and output and input is what you are going to remit as net VAT payable. Next, mention 5 goods and 5 services exempted from value-added tax. We have some products or some services that are not subject to value-added tax, that when you buy them, you are not expected to pay value-added tax. Okay, you are not expected to pay value-added tax on there. So the current says you should mention 5 of them. 1, baby products. Baby products. When you buy baby products, what are baby products? Napkin, baby clothes, baby towel. All kinds of baby products are exempted from VAT. Are not paying VAT on them. 2, basic food items. Basic food items. What are basic food items? Food items that are considered to be essential to the populace, that are mostly consumed by majority of the populace, is basic food item. Okay? Or we can also put it as food that are what? That are in the raw form. Food in the raw form are basic food items. Example are rice, beans, yam, gari, etc. are basic food items. Now, if you go to eatery to buy rice, on your invoice, you pay VAT. Why? Because that is no longer basic. It's no longer basic. That has been transformed. And for you to go to eatery, it means you are a bit okay. So you have the capacity to pay tax. If you don't have the capacity to pay tax, just go to my 12 market, buy your rice, cook it with small pepper, put Maggi, you eat. But if you go to eat rather than okay, thank you. Yeah. So if you go to eat rather than you going to roadside canteen, that means you have ability to pay tax. So VAT will be charged on your invoice. So basic food item, book and education materials. If you go to the bookshop and you buy books, calculators, or any form of education material, you are not expected to pay VAT. Okay? You are not expected to pay VAT. Also, when you buy plant and machinery that is being used in export-oriented business, you are not expected to pay VAT on those machinery. What do you buy export-oriented business? You are using the machinery in a company that is exporting, that is producing product for the purpose of exportation. that is export-oriented entities. So the plant and machinery bought for that purpose is VAT exempt. Is VAT exempt. Okay? All medical and pharmaceutical products are also exempted from value-added tax. These are exempted products. Fertilizer is there as well. We have so many of them. Then, what about services? Medical services is exempted from VAT. When you go to the hospital for treatment, on your invoice, I am not expecting to see value-added tax because it qualifies for an exemption. Services rendered by unit, microfinance bank, and mortgage institutions. So, if you transact business with microfinance bank, that service is not VATable. Don't misquote me. When I say services with microfinance bank, it is service that is within the ordinary course of business of that microfinance bank. Microfinance bank will give micro loan. I mean, when they give you loan, you are expected to pay interest. That interest, ordinarily, they're supposed to charge you VAT on it. But is an exempted item, so VAT will not be charged because it falls within the ordinary activities of the entity. Okay, but if a microfinance bank carries out any other activities different from its primary activity, then VAT will be charged on that service. So the reason for the extension of VAT on interest by microfinance bank is because of to encourage small and medium-sized entities to reduce the amount of interest they pay. If you pay interest and you pay VAT along, your interest obligation will be huge. So to reduce the impact and to ensure that we have SME that is functional, and we want more SME to be coming up, then the interest is exempted from value-added tax. Then we have play and performance conducted by educational institutions as part of learning. For students of drama and performing arts in the universities, from time to time, they carry out plays where they set tickets out for people to come and watch. But for what they are doing that for is basically a kind of learning. Maybe that they are doing a project. Okay, it's considered that play is not basically to make profit, but to encourage their learning, to support their learning. So that kind of play is not subject to value-added tax. So on the invoice that you use to enter for that show, you are not expected to pay value-added tax. Then we have all exported services. What are exported services? If I am here right now and you are outside the country, I am delivering lecture to you in Nigeria, but you, the recipient of that service, you are outside Nigeria, that is an exported services. Okay, it's an exported services. Value-added tax is not charged on it. Lastly, trainings and education organized by not-for-profit or public educational institutions are not subject to value-added tax. These are some of the services that are exempted from value-added tax. Next, what are the requirements for filing VAT? If you want to file VAT, what are the requirements? 1, before you will pay VAT, before you remit, if there's anything to remit, you have to compare your what? Your output VAT and input VAT. If your output VAT is higher than your input VAT, you pay the difference. You pay the difference, right? So if the input tax exceeds the output tax, what you do? You are entitled to refund. Like, don't deceive yourself. Government will not refund you. If you claim that your input VAT is more than your output VAT, I will not say government should come and pay you back. Then you are calling the tax authority to come for immediate audit, of your company, because the tax authority want to be sure that your claim is genuine, and you have to be ready to produce all necessary documents that will actually show that your input VAT is higher than your output VAT. And if that is the case, and you're able to claim it, you can't get your cash. Government will not pay you in cash. Highest is that you can use it against subsequent output VAT. Okay, against subsequent output VAT. If you are an importer, before you clear your goods, you have to pay VAT on it. VAT will have been charged. It will have been charged by the custom authority before they release your product to you. Okay, and before you collect your product, you need to collect a clearance that you call what? Certificate of what? VAT compliance certificate. That you take to the port, present it to them before you can claim your product. And your VAT is expected to be remitted within 21 days after the end of the previous month. So the VAT for March will have been remitted on or before 21st of March 2022. And before now, before the tax promax, I believe if you are a tax practitioner, you should know what tax promax is. If you are not tax practitioner, we have tax promax. A tax promax is a platform designed by the Federal Inland Government, Federal Inland Revenue Service for easy administration of all taxes. So you can file your VAT through tax promax. You can file your withholding tax through tax promax. You can file your annual return, company income tax, education tax through tax promax. So it's a platform, it's an online platform for easy administration of taxes. But before the tax promax, you have to fill VAT form 002. VAT form 002. That's the name of the form that you fill, indicating the name of your company, the tax identification number, the period that the tax cover, the amount of product sold during that period, the output VAT on it, the amount of product purchased during that period, less zero rated product, which I'm going to discuss, less exempted products, the one we have already discussed, then the amount of input VAT that you have paid on those products that you have purchased. Then remove the input VAT from the output VAT to get your VAT payable. The process still applies, only that it is now being fully automated. You still fill those things online. Though the moment you put your sales online and you put your purchases, automatically value added tax will be generated for you. It will be computed automatically. So you print the page for payment, go to the bank, or you use remitter to go and make payments, either in the bank or through your internet banking application. So that is the process of remitting your VAT. Identify 3 acts which constitute an offense under the VAT Act and the associated consequences. That is offenses and penalties. Offenses and penalties. 1. When you furnish false returns, false documents, okay, it is an offense. You falsify document because you want to reduce the VAT you want to remit. We have companies doing this, non-compliant companies. So it's an act of tax evasion. Is an act of tax evasion. So in furnishing an information to FRS, you make statement which is false in any material particular. You are guilty of an offense and liable on conviction to a fine of twice the amount underdeclared. So you have underdeclared because you have falsified your information. So if you are convicted, you are liable to payment of twice the tax that you did not want to pay before. Okay? Then, evasion. A person who participates in or takes steps with a view to making the evasion of the tax by him or any person possible is guilty of an offense and liable on conviction to a fine of 30,000 naira or twice the amount of the tax evaded, whichever is greater, or to imprisonment for a term not exceeding 3 years. So if you're a director of a company and you facilitate the process of tax evasion, you are guilty of an offense and you pay either 30,000 or 2 times the tax being evaded, whichever is higher, or you go to prison for a period of 3 years or less, whichever you have preferred. A person who fails to notify the FRA of a change in address within 1 month of such change is liable to pay a penalty of 5,000. So you change your address. Before, your address is 63 ABC Street, Victoria Island. Now you have changed your address to 98 Broad Street, Lagos Island. And you did not notify FRS within 1 month of change of address, you are liable to a penalty of 5,000 naira. A person who failed to charge VAT on the invoice or taxable goods or services is guilty of an offense and liable on conviction to a fine of 50% of the cost of the goods or services for which the invoice was not issued. So you are supposed to charge VAT on your invoice, but you fail to do that, you are liable to an offense and you are to pay 50% of the VAT not charged. So we have other offenses and penalties. Now, generally, to round up the class for today, the Finance Act 2019 amended the Value Added Tax Act. Okay, it amended the Value Added Tax Act. And the major amendments were that, number one, the rate of value added tax was increased from 5% to 7.5%. Before the Finance Act, value added tax is charged at 5%. But the Finance Act raised the rate from that 5% to 7.5%. Consequently, in your exam, the rate of value added tax is no longer 5%, but 7.5%. That is the basis upon which the examiner will set your question. Also, another good amendment is categorization of companies into 3 categories: small, medium, large. You'll be classified as a small company if you have a turnover that is less than 25 million, less than or equal to 25 million. You'll be regarded as a small company. And what is the obligation of a small company with respect to value-added tax? A small company is not liable to value-added tax. One, a small company is not required to register for value-added tax. You don't have to register for VAT if your company is a small company. That is, you generate revenue that is less than or equal to 25 million. 2, you do not have to charge VAT on your invoice if you are a small company. 3, since you do not charge, you don't need to remit. You don't even need to file. You don't need to file VAT. Now, in making an assessment of whether you are a small company or medium, you have to be very, very careful in the sense that you have to look at if you are an existing company, your company has been in existence, you have to look at your activities in the previous year. In the previous year, to 31st December 2021, was your turnover up to 25 million? If yes, even though in this year you have not achieved 25 million, you are required to register for VAT and what? Charge VAT on your invoice and remit and file accordingly. If, however, in the previous year, your revenue is less than 25 million, which means you are a small company. So you can still apply the fact that you are a small company in the current year. But you have to make an assessment that at every point in time within the year, you will not become a medium-sized company. If you anticipate that before the year runs out, this company might likely move from small to a medium-sized company, then you don't have to wait until you get to 25 million. You have to start immediately your VAT obligations. If you refuse to start and somewhere along the line, before the year ends, you make a turnover of up to 25 million, you will be liable to a previous penalty of no compliance. All what you have not filed before, the tax authority will compute penalty on them and you'll be required to what? To pay accordingly. That's the reason why assessment is very, very key. To be on the safer side, it might not be easy for you to assess whether you are going to meet up with the requirement of medium-sized company. So to be on the safer side, even when you are a small company, it's advisable that you register for VAT and you file your return accordingly. If you register and you file return, the moment, if this month I have not attained 25 million, I don't need to charge VAT, but I can file. What will I file? I will file nil return. I have filed. I have completed my obligation, but I don't have to remit because I did not collect any VAT. So that will put you on a safer side rather than you not registering and not filing. Okay. Another thing we need to discuss is if company A is a small company and company B is a medium or large company, what is the tax obligation of these two? That is where self-accounting for VAT comes to play. So I'm a large company. I buy product from a small company. That small company is not expected to charge me VAT because the company is a small company. So on the invoice, the company has not included VAT on me. Now, when I collect the invoice, I'm a large company or a medium-sized company. I have to self-account for VAT, meaning that I have to charge myself VAT. I will have to compute the VAT on the invoice given to me by that small company. And I go and remit the VAT myself. That is self-accounting for value-added tax. Okay. Now, for oil and gas oriented businesses, we also have what we call reverse tax charge. It works in the same way with what? Self-accounting, in the sense that if I render service, I'm an oil and gas oriented entity, and I render service to another company. Sorry, I think I'm missing it up. That company renders service to me, rather. Another company renders service to me. The company will charge me VAT, right? And the VAT is expected to be paid alongside the invoice amount of the goods or service. But if I'm an oil and gas oriented business, I will not pay the VAT to that company as applicable to other companies. What I will do is I will withhold the VAT. So I will treat the VAT as if it were a withholding tax. For instance, if the cost of the service the company renders to me is 100,000 and VAT is 7,500, I'm supposed to pay 107,500 to the company so that the company will go and pay the 7,500. But for oil and gas company, that 7,500 VAT, you are expected to withhold it. You treat it like a withholding tax, and you now go and remit it yourself. That is the treatment of withholding tax for oil and gas oriented entity. So Another amendment in Finance Act 2019 is the review of the fine. Before the Finance Act, if you fail to remit VAT, you are liable to pay 5,000 naira every month of fine, or 5,000 naira every month for which the failure to remit occurs. But the Finance Act amended that law. Now, if you fail to remit VAT, for the first month of failure, you are liable to payment of 50,000 naira and 5,000 naira subsequently for each of the months that the failure to remit persists. That is a new law with respect to VAT, no remittance of VAT. So, ladies and gentlemen, these are reasonable things you are expected to know as far as value-added tax and stamp duty is concerned. Let me take your question in the next 1 to 2 minutes. Before we call the class off. Question. Question. Any question? Okay, in the absence of question, can we call it a day on this platform? The class continues, but with another person will. Okay, you said yes. What's your question? What's your question? Okay, so the class will continue with another lecturer coming in. However, we need to end this session. You need to log in again by 9 p.m. for a continuation of tax. Thank you. Have a wonderful night rest. My host, you may end the class.
Thank you, sir.